Hey, what's going on, guys? Neil here, bringing you a brand new video. Hope everyone's having a great day. Today, I just wanted to bring you guys a video on the housing market and what a recession could be potentially having an impact on the housing market. And we're going to talk about a few details like interest rates and potential drops that we've seen in the past. So, this is a Motley Fool article. I'm just going to use it as a reference. People are kind of talking about it may not be as scary as homeowners expect. Obviously, we had the Great Recession, which happened in 2007, 2009. And during that time, basically what happened is we had, it's called the Great Recession, but what exactly happened was everyone was getting a loan and was able to get a loan and were buying houses that were out of their means. Then unemployment skyrocketed. So if we have two negative prints of GDP in a row, followed by really high unemployment, that's gonna indicate for a recession. So right now, the house market's very hot, right? But home prices are near record high, and that's because demand is soaring. The supply is not crazy high, and there's an insane amount of demand. But a recession could bring some changes to the housing market. So what could that look like? Obviously, no one knows. In my opinion, I don't think it's going to be as bad as the '08 crash, but we definitely could see a correction in the housing market moving forward. I just think it's going to take time as well. So as of late March, home prices were up about 15%. Um, different benchmarks for recession. It's marked by high employment. Sometimes stock values plunge during a recession, though that always doesn't happen. Similarly, home values can plunge, but the extent at which happens may hinge largely on factors like borrowing rates and buyer demand, which we're going to talk about interest rates here in a second. So, the main reason the home prices are so inflated right now is inventory is low and demand is high. So, it's a classic supply demand trade here. So, then unless the housing inventory picks up really soon, we're unlikely to see a catastrophic drop in home prices because supply is so incredibly low. So, should homeowners be worried about a recession? Right now, homeowners are sitting on record levels of equities. Even if recession hits and home prices drop, they shouldn't fall to such low levels that equity is wiped out. In fact, because the housing market still sorely lacks inventory, a near-term recession could actually end up minimally impacting home values. That's something current properties owners can take comfort in. Basically, what this article is saying is that yes, a recession might hit, or it might already be in a recession, depending on how you define it, but it's not going to completely wipe out homeowners if we even see a drop in real estate prices, because a lot of homes are up 15% on an annual basis. So even if we see a 15% drop, let's say in the next 2 years or even a year or two, it's not going to completely wipe everyone out, right? And I don't think it's going to be as bad as '08 because it was a little harder, and it still is a little bit harder to get loans right now. But why do we think that that the housing market could go through a decline? There's a couple of reasons, and it's going to be exactly what we talked about, like supply and demand. But what is going to affect the supply and demand is that people are going to be getting worried about high interest rates. So we're going to be talking about, 30-year interest rate basically at 5.5%, right? Anywhere from 5.3 to 5.5% currently. That's a really high number, and that's going to cause a lot of people to not want to go ahead and buy homes when, just 3 months ago, 4 or 5 months ago, we were at a 3% interest rate on the 30 year. So people aren't going to want to pay, almost 5.5%, 2.5% increase, almost a double in interest rates on the 30 year. They're not going to want to pay that, especially, let's say you're buying real estate as an investment. You're not going to want to go ahead and borrow money at 5-6% when you're only going to be making 7 to 8%, right? That's not a very big margin for all the work that goes into real estate. So hopefully, with these high interest rates, the demand will ease up, the supply will hit the market. There's no more eviction moratoriums. All that was taken away. So hopefully, a lot of these homes that might be not in the best condition will start to hit the market. People might be desperate for money. They're going to have to go ahead and list their house. So let's talk about how bad it could get and why there's no reason to panic, and why this is not bad for either current homeowners or people who are looking to buy. That's also going to be something that might come up, and if you're ready to pounce on that opportunity, then you're going to be in a good spot. So if you look at Google here, prices fell by a record 9.5% in 2008. The average home was initially 218,000. It fell to 197,000. Comparison, median home prices dipped a mere 1.6% between 2006 and 2007. So for home prices to be up basically 15% over year, right? That's a ton when you can see it. Home prices fell, 13.9% between 2007 and 2009. Some regions prices fell 40-50%, but we're just looking at averages here. So it's really important to keep this in mind that if you're a homeowner, if you bought a home recently, there's nothing to panic about. The market has been absolutely booming, whether it's your personal home, an investment property, whatever it might be, a rental property. Real estate's still a very great defensive asset because usually it goes up in equity a couple percent a year. There's a bunch of write-offs that come with it. And on top of that, you can go ahead and get that passive income from rent. So it's definitely still a timeless investment. Hopefully, we'll see a little bit of a correction here in the markets, or at least that's what I'm expecting, but I expect it to take some time as well. Real estate's a lot more illiquid of a market compared to stocks and crypto. Obviously, it's a whole different market, but in order to sell a home, you have to find someone who wants to buy that exact home in that exact location, and you have to agree on the price. Whereas there's no, market makers or bids and asks when it comes to stocks and crypto. You can immediately sell something. So that's kind of like the classic debate, whether you should invest in stocks, whether you should invest in real estate, whether you should invest in crypto. It's good to have a diversified portfolio, and real estate's something I'm definitely going to be looking to move into. I'm just hoping that we can see a slight correction, or at least a slowdown in the massive increase. And interest rates are really high. The Fed is kind of doing the opposite of what they did in the past. They're easing up on the printing, they're raising interest rates, and their main goal right now is to get inflation definitely down and under control. We saw a slight decrease on the last inflation print, but it wasn't very significant. I think it went from 8.5 to 8.1, and it was higher than they expected. So yeah, it did go down a little bit, but very marginally. So, with a lot of supply shortages, a lot of uncertainty going on around the world, a lot of different things going on right now, high interest rates, high inflation, I think it's still going to be a pretty choppy market out there, at least this year, until the Fed goes around and changes their agenda. So today I'm glad that we got to talk about real estate here on this channel because I don't talk about it too much, but it's definitely something that's important to keep your eye on. Interest rates, housing prices, all these different things, right? Median prices of homes. So it's something I'm going to definitely be keeping an eye on and updating you guys on my journey as things move forward. And I hope you guys enjoyed the video. If you did, that'd be great if you could drop a like, comment, or subscribe. It really helps the channel out a ton. And if you guys want to support me even more, definitely check out my affiliate links below where you can get free stocks or crypto just for signing up. And if you'd like to be part of the community or reach out to me, the best way is to join my Discord and send me a message there. Hope you guys all have a great rest of your day.